Hello everyone, welcome to the Elliott Wave Analysis.com YouTube channel. Today is November the 5th, and we're going to be looking at the chart of dollar index as the chart of the day for today. 60 minutes time frame here. We can see we ended with 4 in the primary degree and currently pulling back. Now, which means that this current pullback will be in the wave 5, right, in the primary degree. And you can see in the subdivision here, this looks like a diagonal 5 swing ended here. You got a reaction higher to correct these 5 waves, and then it made new low below the previous low, right? So all in all, you have a lower low sequence from the peak, and it kind of looks like a 1, 2, 3, 4, 5, right? That's what it looks. I know the 3 and the 4 is not really very ideal, but we can count it as a 5 swing. I'm gonna let you know a little bit later what the probabilities are, and then everything is all about probability, right? When we are forecasting, my job really is to explain the rationale instead of telling you this is it and there is nothing else that can happen, because it's not like something that is set in stone, right? We need to think of it in terms of probability, just like when we play chess, we think of the best way, right? So here we're calling this as a 5, and then looking for a 3-ish rally now. And as long as it stays below this 104.60, we like it lower, right? That's what the chart here suggests. So currently, this current rally only looking like a 1 swing up in the form of a 5 waves, and then we can go down. Now, I think in terms of the various possibilities in the shorter cycle, there's always a lot of possibilities in the shorter cycle, but the bottom line is, for this view, it's very simple. As long as we stay below here, regardless whatever form it takes, we like it lower as long as it stays below here. Now, for example, let me show you one possible options in which, for example, we can just go down straight from here, right? You can just label ABC like this, and then we just go down straight without having to exactly do this and this. Or we can do WXY. So we could be doing a 3-ish pullback like this, 1, 2, 3, right? 1, 2, 3, and this ending W, and then you have a pullback like this, and then another 3-ish up, and then lower, right? So you can see there are a couple of different possibilities there in the shorter cycle, but all of them basically implying as long as we stay below 104.60, we like it lower. Okay, now let me tell you in the larger degree what is the rationale and why most likely, in my opinion, we can see for the downside below 104.60. Okay, if I look at the 4-hour time frame, right? Now, for the time being, just ignore, I mean, we're calling this wave 4, right? But just ignore what kind of wave this is, right? Just look at the structure. Now you can see this rally here. That sort of looks quite impulsive, isn't it, right? But anyway, you can see this current rally ended here, right? You can see this pullback here does not belong. It does not belong to the same cycle as this rally, because every single pullback has been similar in the size, right? And sort of fit within some sort of a channel, so to speak, right? But this one definitely sort of the outlier, right? It kind of breaks out of the channel, and therefore you could say that this cycle has ended here. And now, regardless whatever wave it is, it's not really that important for now. But we know by looking at the chart, this rally or this cycle looks finished. Now, if it is finished, most of the time you need to correct that rally, right? You need to correct that cycle, and the correction should usually be in the form of at least 3 waves. And now you might say, well, couldn't we have a 3 waves down already? 1, 2, 3, and the answer is yeah. You could say if I mean, again, always there is a possibility, right? So you could say that, like for example, if you want to call this as a ABC, perhaps you could, perhaps, but here we come to another consideration here. If the cycle ends, you get a reaction lower, you get a correction, you get a pullback, right? The pullback, think about it, the pullback, now it depends on the trend, right? If the trend is actually bearish, then actually it will go to new low below here. If the trend is bullish, you need to correct the cycle in 3 waves. But the correction so far, if I use the retracement, is only 23.6% retracement. Now, typically from probability point of view, that is considered to be a bit too shallow to correct the entire cycle. And the correction typically minimum is 38.2. Not always, but typically at least 38.2, and ideally is around 50 to 61.8, right? So I'm talking about if this turns out to be bullish, the dollar is bullish, we still need to correct this cycle, regardless whether it is bullish or not. Now I'm seeing that the correction so far is only 23.6, so that means it looks from a probability point of view is still too shallow to correct this. So therefore we most likely need to have further downside, as long as we don't break above this peak, which is this same peak here, 104.60. Now if this is indeed wave 4, that's why I said just ignore wave 4. If it is wave 4, then what that simply means is actually eventually we're going to break below here. But let's set aside that for a moment. Even if that is not the case, even if this is actually bullish, it seems to me that the pullback so far still is too shallow, and therefore still needs further downside regardless, right? So whether or not this is bullish or bearish, the conclusion is most likely as long as we stay below 104.60, we could see further downside. Okay, so that's the update for today. And as always, if you want to get more updates on dollar index or any other forex commodities indices, feel free to check our service. We have 14 days trial, and the link is in the description of the video. So see you all again next time, and have a nice day, everyone.